After an uncertain start to August, Head of Asset Management James Timpson reflects on the rest of the month. Now we're into September. James, how's it been for you and the investment team?
Well, you may remember this time last month when we were speaking, I mentioned that the start of August had been really volatile. So there were fears that maybe the Federal Reserve had left it too late to start lowering interest rates. There was a slightly disappointing jobs report, and that led to fears that the US could be heading into a recession. And so that caused a big panic in markets. In the first 3 days of the month, the US market, the S&P 500 index, that fell over 6% in just 3 days, including its biggest one-day fall since late 2022. Also, Japan was particularly heavily hit during this time. The Nikkei index fell 12% in 1 day, its biggest daily drop since 1987. But the sell-off was global. It wasn't just the US and Japan. Global markets everywhere were tumbling, all because of these fears that the US could be heading into recession. However, this all turned out to be a bit of a flash in the pan. The panic subsided really quickly, and the US equity market had fully recovered within 2 weeks. So it's been a really strange month, a big fall right at the start, and then a fairly quick recovery. So actually, the month has more or less ended flat. The fund returns are pretty much flat for the month, which, given where we were 3 days into the month, is actually not a bad result.
I was going to say, you've got a drop, and then you've got a climb, and you're where you started.
Yeah, pretty much. Of course, it was a really eventful month. You just wouldn't think it to look at the month-on-month returns for the funds or the indices.
Are there any patterns with September every year? Have you got any expectations of how markets might perform based on September's past?
I suppose we've got another Bank of England Monetary Policy Committee meeting this month, and normally that would have been one of the biggest stories of last month. So right at the start of last month, we had the Bank of England meeting, and they decided to lower rates for the first time since 2020, when you saw those emergency rate cuts at the start of the pandemic. So having been at a 15-year high for the last 12 months, the base rate here in the UK has started to come down. And it's expected that there will be a few more rate cuts in the coming months, so we'll have to keep an eye on those. And in general, when rates are cut, that's good news for the economy because it becomes cheaper to borrow money, so it stimulates the economy. So in theory, more rate cuts should be good for markets, but we'll have to wait and see.
Thanks, James. And just a thought around the team. Are the analysis team keeping busy, looking at new potential stocks?
Yeah, so every stock we hold in the fund does have to get reviewed by an analyst at least once a year, regardless of whether it's flagging as potentially not being value anymore or not. And of course, when we do sell stocks, we're always looking for new stocks to replace them. So there's plenty for our analysts to be getting on with.
Thank you, James. Seems the usual old story, keeping an eye on the markets, ups and downs, and navigating through those waves.
Absolutely.
Thank you very much for your time again, and I'll look forward to the quarterly performance update next month. If you've any questions, please do speak to your advisor or contact us through the website. Thanks for watching.